All right, Jim Lebenthal, give me your thoughts on this market, which is well off of its lowest levels. It's still so unsettled, though.
Yeah, unsettled, and I think Mike used the word uncomfortable. That's a good word for it. I think we need to be prepared that Fridays with this sort of news cycle are not likely to be good days because there's 3 days ahead where the markets will be closed and anything can happen. So as much as we've gotten used to these intraday rallies to be much higher at the close than in the middle of the day, I'm not so sure it's going to happen tomorrow. Now, I'm speaking in the shortest of short terms. In the long term, there's a lot of cushions in the economy and the markets, whether it's a high degree of oil inventories globally or low jobless claims, a lot of capital expenditures. So there's a lot of cushions, but tomorrow could be tricky going into the weekend.
We'll see. I mean, jobs report as well. You know, we feel pretty good about the economy, and we have every reason to do so. But I think we're a little bit nervous about what the employment picture is projecting to in the years ahead in this country.
I think that's a very good point. I don't think the worst fears are likely to really show up in any meaningful degree tomorrow's labor report. Every indication, you look at ADP, jobless claims, et cetera, looks like it should be a decent report tomorrow. But the fears will linger. You know, if you're talking about the SaaS apocalypse and the decline in the number of seats and just jobs in general, those fears are going to be with us for a little while. Ultimately, though, this is a strong economy, good earnings growth, good GDP growth, and we just got to get through this conflict in the Middle East without it getting worse.
Yeah, I mean, it's just a lot of other stuff going on, too, even without war. You look at software stocks, you sort of allude to it as we think about it from a jobs standpoint, but Salesforce and some of these other names, Twilio's higher, Palantir's higher, IBM is higher, the cyber names are higher. Do you think that sector's been washed out enough?
I think it has, but I wouldn't be surprised if that's short covering going on. There are certainly highly volatile sectors of the market, like the ones you just mentioned, software, but also the private credit names rallying today. Those two sectors rallying sort of in the face of this ongoing uncomfort, unsettledness, tells me that it might be short covering more than anything else.
Yeah. What about the banks, Jimmy? They haven't traded well. I think at the lows today, Goldman and some of these other names looked pretty awful. They've come back a bit, hence the market itself is doing just the same. But what about the group?
Yeah, it's a good question. As I said, there's cushion here. You know, a lot of these banks were looking for a strong IPO calendar, very strong, with big mega IPOs coming up in the spring and summer. But if we continue with the volatility that we're seeing right now, if that continues for a while and you start to see that IPO window shut, that might be negative for the banks, and I think that might be what they're trading on.
I mean, money going back to the mega caps, too. No surprise. Quickly, right?
Defensive growth, and also at very good prices. Microsoft, 23 times earnings. You know, Alphabet, Amazon is at the lowest multiple we've seen in many, many years. So there's good value there.
Yeah, all right, Jimmy, it's good having you. I appreciate you joining us very much.